So you open your charts and you're about to mark us some structure, but then you get hit with all the doubts. Do I take from this low to this high? Or is it this low to this high? Well, what about that low? What about this? What about this? But wait a second, is the market actually bearish here? So is the direction bullish or bearish? How do I actually draw my fib? Is it from here to here? Or is it from here to here? Or are we actually bearish right now? Like, what exactly do I draw? If you have this type of confusion, in this video, we're going to destroy all your doubts about market structure. Alright, in today's lesson, I'm going to teach you about systematic market structure mapping, and we're going to do this by introducing you to the concept of the valid ranges. Now, this is a concept that I came up with after 4 to 6 months of testing and really asking the very simple question, what makes structure valid and how I can systemize it? And then the valid ranges were born. So what are valid ranges? Those are specific rules for determining your valid structural formations. And those formations are simply our higher highs, higher lows, and lower highs. Now, disclaimer, if you are a complete beginner, if you don't know what even market structure is, I'm gonna leave a link in the description or leave a card that you can click. Go and watch a very strong foundational video so you know what market structure is. And then if you have the question, all right, how do I mark valid higher lows or lower highs? You come back at this video. Now, why do we need valid ranges? Well, firstly, to ensure that we draw structure correctly and also flow with the most recent structure shifts. Because a lot of times you take those very massive, large legs and then the market has already shifted 10 times before you actually know it. To also ensure that we always have the same market structure markups and remain systematic with our analysis. Because if you're always drawing structure in a different way, well, you don't have an edge. In order for you to achieve consistency, your analysis also has to be consistent. And the valid ranges are going to help you with that. And finally, as a result, this is going to remove any doubt and confusion when it comes to picking your major higher lows and lower highs, because just the rules are rules. You cannot go around them. So you might ask, what are the main aspects of a valid range? We're going to cover all of these, but they simply consist of two things. Having an opposite candle. So that is a candle that closes in the opposite direction of the current trend. So if we're having bullish push, we need a bearish candle. If we're having a bearish push, we're going to need a bullish candle. Quite simple. And also having a pullback candle. So that is a candle that does not break the previous candle's high or the previous candle's low. And of course, this variable for the pullback candles, it can be tweaked based on the time frames or based on your requirements. So once you actually learn those rules, feel free to change them, feel free to tweak them to your liking. Now, before we get into the details, I just want to very quickly cover the candle anatomy. So what does a candlestick actually consist of? We are having open, high, low, and close, OHLC values, okay? So in the case of a bullish candle, the market is going to open where the body starts, okay? The lower wick is going to be the candle's low, then the market pushes up, it reaches a high, and then it retraces, and where it closes, this is where the body is going to end, okay? So that is very basic stuff, but I just want to cover it. For a bearish body, the market actually opens here. This is where it opens. It first pushes up to make a high, then it very nicely pushes down, all the way down to make a candle low, retraces and closes. So the body is your open and close, and the wicks are your candle high and candle low, okay? So very simple, hopefully that's clear. Now, with that being said, let's talk about the first aspect of the valid ranges, and that is the opposite candles. So what is an opposite candle? Pretty simple. This is a candle in the opposite direction of the current trend or the current range. So simply that is a bearish candle in the bullish trend or a bullish candle in the bearish trend. Now, why do we need an opposite candle? Because an opposite candle signifies that there is a real pullback and that the opposite side of the market is entering. Also, how I actually discover this is by going to the line chart. You know, on TradingView, you have your candlesticks, but you also have a line chart. And if you ask the question, when does a line chart actually makes a pullback? When there is an opposite candle. Okay, so when the market is pushing up. So if I just very quickly give you an example, when you have a line chart, let's say that the market is pushing up. Okay, so when it's actually going to push down, when we have an opposite candle. So if those candles are bullish, 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 when you have a bearish candle close, that is when the line chart actually makes a pullback. Okay, so that is pretty much how that came up to be. Now, the important part here is once again the candle closure. It must be an opposite body. And by now you pretty much know the candle anatomy. A candle closure, you have the open and the close, and that should be pretty much opposite to the trends that we currently have. So when it comes to wicks, when it comes to looking at the opposite candle for the valid range theory, the wicks or the type of candlestick, like what exactly, how does it look like, it does not matter. What truly matters is to be of an opposite color, which also means that dojis don't count. It must be either a bearish candle in a bullish market or a bullish candle in a bearish market. Let me give you some examples. Here it is, quite simple. We are having an overall bullish trend here. So bullish candle, again, the wicks don't really matter. What matters here is that, again, we have a push, and right now we're having an opposite candle. What classifies this as an opposite candle? Well, very simply, a bearish body. All right, in a bearish trend, bearish candle, whoop, there is a very nice bullish candle. That is our opposite candle. Okay, super simple. That's it, and that's the first thing you need for a valid range, and it's extremely simple. Hopefully it makes sense. Now, let's give some chart examples. Let's plot a chart here, and I want you to pause the video and try to spot all the opposite candles. This is an overall downtrend, so pause the video and spot the opposite candles. Did you pause, you nasty? All right, I hope you did. So let's put them out. There we go. So I actually took only the most important opposite candles that we need. So here we see we have a very nice push lower, bearish, bearish, bearish candles. And all of a sudden we're having a bullish candle. Okay, so precisely in this situation here, this is when the line chart is actually starting to make a pullback. So that's an opposite candle. This and this and this are all opposite candles. This and this and this are also opposite candles. But what we truly need is just one opposite candle. We haven't really gotten to the rules, but only in this case, this matters. Then again, you can see the market actually breaks this valid range. And what it does here, immediately after forming a new low, opposite candle. Continues to break, opposite candle. In fact, two. Break structure again, bearish, 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 bearish. The first opposite candle, there it is. So that is the first rule. That is the first thing we need for a valid range. And then again, you can see the market creates 1,000 more opposite candles. It makes a very big pullback. And then as soon as we pretty much break this low, so again, we haven't really gotten to the rules, bearish, bearish, bearish candle, boop, all of a sudden, opposite candle. Perfect, right? Then we break structure again, bearish, bearish, bearish. All right, there is the first opposite candle, bingo, right? That's it. Very simple. Let me give you one more example. Are you gonna pause the video this time? You already saw how I did the example, so right now pause it and do it yourself. Damn, if you didn't pause this time, I'm gonna find you and you know what I'm gonna do. All right, let's put them on. So there are pretty much the most important opposite candles. Here we're having a very nice push higher. The market creates the first opposite candle, bingo, that's what we need. The market then pulls back again with a couple more opposite candles, pullback candles. Then we break structure again. So 1, 2 bullish candles, opposite candle. We break structure again, opposite candle. So in this case here, those two things are valid ranges. Those two things here you can actually trade. And that's amazing. We push up once again, breaking structure, bullish candle, all right, bearish candle, opposite. The market breaks again, bullish, bullish, all right, opposite. Bullish, once again, opposite. Okay? Then we continue to push lower, but we don't actually continue higher this time. We actually end up breaking the valid range that caused the last structure break, okay? And then we break it, and you can see immediately on the break, we immediately print an opposite candle. The market continues lower, opposite candle, continues lower, and here we pretty much got the opposite candle, but in the same time, we also made the trend change because this here is a valid range. Bullish, 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 all right, bearish. All right, then we push up again, 2 bullish, 1 bearish opposite candle. Then we make a very nice series of bearish candles. And then the first bullish one is our opposite candle. Okay, so hopefully with those two little examples, it makes sense. If not, leave a comment. We're going to tackle it. Now, on to the next part. the pullback candles theory. Now I want you to really pay attention because this one is going to be a little bit more complicated than the opposite candles. So what are pullback candles? Well, it is a candle that does not break the previous candle's high or the previous candle's low, depending on the direction, all right? So if you are in a bullish market, a pullback candle should not break the previous candle's high because we're going up, right? And if you're in a bearish market, the current candle should not break the previous candle's low because we're going down, okay? Now, what does a pullback candle actually signify? Because we always want to be looking at the why. So why are those things actually important? Well, it signifies that there is no continuous buying or selling pressure and that the market is actually pulling back. Okay? So here, you need to remember that in the opposite candles, all we cared about is the body. So is it bullish or bearish body? Here, the important part are the wicks. So we're going to be looking at the wicks of the candles, which is why, once again, you really have to learn candle anatomy and you have to start looking at the open, high, low, and close values of the candles on TradingView, because the high and low stats are going to be important in order to truly determine pullback candles. Now, again, I said it, but I'm going to say it again. The color of the candle when it comes to being a pullback candle does not matter. Only the wick matters when it comes to looking for a pullback candle. Okay? And so pretty much the pullback candle's high or low is compared with the highest or lowest candle in the current range. Now, that might sound a little bit confusing. We're going to look into the details, but pretty much when the market pushes up and up and up, and then pretty much a pullback will be a candle that does not break the last high in this case. But of course, examples are incoming. Now, let's have a look at some examples. Oh yeah, so I just wanted to mention here, if you trigger this on TradingView, you're going to have a look at these things. So this is your open, high, low, and close. Those are the precise price points of any specific candle, and I'm going to show you later how to actually look at those. Now, on to some examples. So here is the first example of pullback candles. So again, you can see we're pushing up, and then we right now look at the wicks. So this here was the previous candle's high, and you can see then the next candle, the high of the next candle does not break the previous candle's high. Okay, so in this case, this is a pullback candle because it does not break the previous candle's high. At the same time, this is also an opposite candle because it also has a bearish body. So this here by itself, by the way, is already a valid range. This is already a valid pullback. Okay. Here is bearish, all right? There is the lowest low right now in terms of this bearish push, okay? The market makes a pullback, but again, we don't look at the body in this case, we look at the wick. Does the wick cross the previous candle's low? No, all right? So this candle here is a valid pullback candle. That's it. It's also quite simple. You just have to see it a couple of times in order to really make sense of it. Let me give you some more. Okay, bullish situation, bullish candle, okay, and then we have a pullback candle here. Now, why is this candle a pullback candle? Well, because it didn't cross the previous candle's high, okay, and this pullback candle's high is actually lower than the previous candle's high. That makes it a pullback candle, okay. Now, here I give you an example where the body is actually bullish, okay, so this is not an opposite candle when it comes to the bullish push, but it's actually a pullback candle because it does not break that highest high here. If, for example, just very quickly to give you a little example to illustrate my point, if let's say this candle here went to break this high, would this be a pullback candle right now? No, because that high was crossed. So this is not a pullback candle. Then this candle is going to have a new high, and we have to wait for the new candle to open and see, is it going to cross it or is it not going to cross it? Okay, but of course, more details on that a little bit later. And of course, we have the exact same bearish example, bearish candle, bearish candle. There is the last candle's low. So this is in this case, the lowest low that we have. The next candle opens, it does not cross that previous candle's low. So in this case, we mark this one as a pullback candle, but you can see in this case, it is not an opposite candle. Why? Because it does not have a bullish body. Okay, so kind of you can see that there are two situations here. This candle, in this case, is both a pullback candle and an opposite candle, but in this situation, this candle is a pullback candle, but it's not an opposite one. Let's have a look at some more examples. This is exactly the one that I gave you. So here is, for example, not valid pullback candles. So here is, for example, the push, same example as last time. I actually even gave an example of this one. There is that previous candle's high, but you can see the market then prints an opposite candle. However, remember, when it comes to pullback candles, we look mainly at the wicks. So the wicks in this case, the wick went above that previous candle's high and wicked it. So this candle is not a pullback candle. It is an opposite candle, because when it comes to opposite candles, we only look at the body, but it's not a pullback candle. So then the next candle, what the next candle should not do, it should not cross that current candle's high, right? There is the bearish example, bearish push, there was the last candle's low, but then the market opens again and it crosses that candle's low. Okay, so this here in this case is an opposite candle. So we have made the bullish body, the line chart is already starting a pullback. However, the market is not yet in pullback mode because it hasn't made the pullback candle that does not break that latest candle's low. So in this case, once again, we're going to refer when the next candle opens, we're going to refer to the low of this candle, and we should not see that next candle that opens break below this low. Okay? Hopefully that's clear, because right now we're getting to the rules, and I'm sure we're going to get to some more examples. Then you're going to watch the rules again, and then all you need to do is just go on the charts. Okay? The main variable are the pullback candles. So when it comes to the rules, you can decide to use one pullback candle. So PBC, by the way, is short for a pullback candle. So you can decide to use one pullback candle on the 15-minute time frame, or maybe then even two pullback candles on the hourly and the daily time frame, or you can decide to use two pullback candles on the 50-minute and one pullback candle on the 4H and on the daily. For simplicity right now, for this lesson, let's stick to one pullback candle and also one opposite candle. For the opposite candles, I would say all you need is one. Because as I said, all we need is that line chart to actually make a pullback. And it does the pullback when there is just one opposite candle. So again, keep it simple. You do not need two opposite candles. You don't need three opposite candles for a valid range. All you need is one opposite candle. Then what matters later is that you actually focus on finding the pullback candle. Okay? Now, the next very important rule is that a valid range always causes a structure break, SB, or a trend change, TC. Now, if you don't know how that stuff works, again, I'm linking you back to that YouTube video that I mentioned earlier. And I'm also going to invite you to the Fanatic Foundation module, which is in school, where I teach all of that stuff also in great detail. You can find links in the description. Okay? So always needs to break structure and always needs to make either a structure break or a trend change. Now, for simplicity in this lesson, we're also going to be utilizing wicks as breaks, because wicks are a lot easier to track, especially while you learn right now the valid ranges. Later on, when you master the valid ranges with wicks, you can very easily shift to body breaks. However, body breaks sometimes become a little bit complicated, because you might get, for example, a valid range that is being wicked out 5 times, but not really body broken. And then the market starts actually changing in the opposite direction, but you're still actually looking for that body break. Okay, I have backtested this thoroughly. Wicks as breaks works amazing. What truly matters in this case is that you have a good price positioning on the higher time frames, but I'm already speaking for entries. Okay, and now when it comes to wick and body breaks, we're going to cover in another video about fakeouts and breakouts, and I'm also going to link another potential video where I actually talk about this as well. Okay, now the process. All you need is to get your rules ticked. So all you need, once again, is one pullback candle and one opposite candle. That's it. Now the order at which they actually arrive can vary. So sometimes the opposite candle can appear first, then other times the pullback candle can appear first, then you have to wait for an opposite candle. Once again, all you need to do is just master that candle anatomy and just wait for that valid one pullback candle or that valid one opposite candle. Okay? And other times, for example, one candle can fulfill both variables. One candle can be both an opposite candle and a pullback candle simultaneously, which is amazing. You immediately have a valid range. Okay? So the aim here is to become a master of candle anatomy and really looking at the candles and reading them on a candle by candle basis, tracking the candles until you pretty much fulfill the rules. Okay? Now, before we jump into some examples, some details. Always use the open, high, and low close values when in doubt for the pullback candles, because equal highs and equal lows, so perfectly equal highs and lows, are not pullback candles. And 1 pip difference actually is a pullback candle. So if we ever get like two wicks that are very close to each other, check the highs of those wicks. If they're equals, it's not a pullback candle. Okay? A very important thing to do also is to use the highlighter tool on TradingView. I'm going to show you how to mark your valid ranges, because I've taught these valid ranges to a lot of people, and there is one big mistake that is being done, especially in the beginning, is that traders tend to draw internal structure. Okay? And what I mean by this is I'm immediately going to give you an example just to stick it in your head. You're having, let's say you're having this valid range break, and then you're trading from this high to this low, because at this low you get an opposite candle and you get a pullback candle. But then what happens is the market starts doing like that. And so what traders tend to do is they say, okay, structure break, trend change, structure break. This is wrong. We're trading between this high to this low. That is our valid range. Anything inside does not matter. Okay, so just giving you that a little bit of a kind of a tip here. We're of course going to look at it on the charts, but just to kind of, to just give it to it right now so you start thinking about it. Any price movement, as I said, inside of a valid range is internal. Only the major high and the major low matter. So I'm going to show you how to mark your major highs and lows with the highlighter tool. When you learn and master both the opposite candles and the pullback candles, then you can very easily change your valid range preferences. So what, for example, I used to do is sometimes on the 15-minute, instead of a 1 pullback candle, I start using 2 pullback candles because the markets are choppy and I want to increase the probability of my valid range. Or you can use, for example, 1 pullback candle on the 50-minute and 2 pullback candles on the 4-hourly time frame, and then 1 pullback candle on the daily. Once you master how to use that strategy, you can pretty much tweak it to your own liking, and you can start testing what works on every single time frame. Mastering also the valid ranges will immediately make your supply and demand zones easier, because there is a supply and demand zone within every valid range. But of course, more on that we're going to cover in another lesson. So let me right now give you some textbook examples of a valid range. Again, textbook in the form of just textbook examples. Here is, for example, a 50-minute valid range scenario where I'm using 1 opposite candle and 1 pullback candle as my valid range criteria. Okay, candle up. Okay, then we have an opposite candle, which is also a pullback candle. Why is that? Well, because we're having a bearish body. Perfect. Rule 1 is ticked. This was the high, and then the next candle's high does not cross that candle's high, so this is also a pullback candle. Check. This here is a valid range. The market pulls back. Then this high becomes our valid range high. And when the market breaks it, perfect. Okay. Then of course we ask, what is the valid range that caused the break of this high? It's immediately this one, because this was already a valid range. Okay. Here is another example. Bullish. All right. Opposite candle. Check. But is it a pullback candle? No. Why? Well, because it crossed the previous candle's high. Okay, so then what we wait for? Well, we have an opposite candle, we need a pullback candle. And so then we take this as our reference point, and you can see the next candle is a bullish candle, but we don't care right now about the body. We care that the market actually does not break above this candle's high. Does this candle break? No. So that is our pullback candle with the opposite candle. This pullback is a valid range, and this is our valid range low. The market breaks, perfect. Okay. Here, the market pushes up, it pushes up, and what are we having here? We're having an opposite candle, but is it a pullback candle? It's not, because those two wicks are perfectly equal. And as I told you in this case, you have to really look at the high stats, because if they're perfectly equal, then this candle here is not a pullback candle. However, we already have an opposite candle, which is good. Okay, so opposite candle, there is one pullback candle that does not break that previous candle's high. Perfect. That is a valid range pullback. The market breaks. There is the low that caused the break. Here's another example here. Pushing up, pushing up. What is this? That is a pullback candle. Okay, rule 1 is checked. We have a pullback candle, but is it an opposite candle? No, it's not. And then the next candle is actually the opposite candle, which is also a pullback candle. Okay, and then the market continues to break. Perfect. That is a valid range. Okay, so those are the textbook examples when it comes to the one opposite candle and one pullback candle. So right now, let me give you an example when it comes to two, just to show you how it actually looks like. So in that case, we're drawing 4 hourly valid ranges in which we're using a one opposite candle and 2 pullback candles, pushing up, making a high. Okay, so there is an opposite candle that is also a pullback candle. So then in this case, we need 2 pullback candles. So we always are going to reference, so this is a very important point, we're always going to reference to this high. That is our highest high. That is the high of the range. So the market should not break above this high, okay, if we want to have a pullback candle. And then we can see here, this is an opposite candle, which is also a pullback candle because it does not break this high. The next candle is also a pullback candle, not an opposite, but we don't care about the opposite anymore because we already got it. It's a pullback candle because it does not break that high. If it breaks this high here, it's cool, but it should not break that high. So then this pullback is a valid range with 2 pullback candles. Pushing up, we're getting an opposite candle, but it's not a pullback candle. So then we anchor to this high, and then we get 1 pullback candle that does not break this high, 2 pullback candles that do not break this high. Perfect, right? That here is a valid range. Pushing up, equal highs. So this is an opposite candle, but it's not a pullback candle. So then we need 1, 2 pullback candles to then break the high. This pullback here is a valid range. Okay, push, pullback candle, but not an opposite. And then we get the opposite, which is also a pullback candle, break, perfect. Okay, those are your textbook scenarios when it comes to both 1 and 2 pullback candles. Right now, just for your reference, let me show you some invalid ranges so you know what you're looking for. Bullish. All right, we're having an opposite candle here. Cool. But then we always refer to that previous candle's high. In this case, this high got taken. Okay. Then this high got taken. Okay, so we got an opposite candle, but then this one broke. Okay, so right now, actually, the sequence resets. And then again, we see, okay, the market continues to push. Then again, we get that opposite candle, but it's still not a pullback candle. So here, we first got the OC. But the market didn't make a PBC and it actually broke the OC. Okay, so then we reset the sequence and we're like, okay, so we have a new high and that is not an opposite candle, it's not also a pullback candle. So then we actually get the pullback candle. Okay, so rule 1 is checked. What do we need next? Is we need a pullback candle to not break this high. All right, so then here in the next example, we're having bullish. Then we have an opposite candle here, but it's not a pullback candle because it broke that previous candle's high. And then we get these equals. So this here is not a pullback candle because we have equals. Then you can see the market just keeps breaking higher and higher and higher. So when you have a break of the previous candle's high, you have to reset that sequence of opposite candle and pullback candle once again. All right. So here, for example, we have an opposite candle, but then the next candle breaks. Okay, so right now we need a new opposite candle. So now we have this candle. Okay, so right now we have an opposite candle, but we still need a new pullback candle. And then if the next candle still breaks, well, again, we keep waiting for new opposite candle and for new pullback candle. We need to have that pullback. We need to have these candles that are actually not breaking above or below the previous candle's high and low. Now, you're also going to encounter situations that I call shit wicks, and those are very big candles that take out both the high and the low. So in that case, you can see we have a push. There we have an opposite candle, but it's not a pullback candle because it breaks the previous candle's high. And then we have a beautiful pullback candle here. Good. This is a valid range already. That is a valid high. Okay. And then here you can see the candle opens, it takes the high and it also takes the low of the valid range. So that is that shit wick. Usually happens during news, usually happens during volatile times. So then you simply have to wait and keep following the rules again. Now, when this candle closed, that was an opposite candle. So what do we need? We need a pullback candle. There's the pullback candle, and there is the market breaking the high. Okay, so this right now actually turned into a valid range. We just keep following the rules. Okay, so when you get that shit wick, always wait a little bit. So if I show you a little bit, another example how it can play it out, push, push, opposite candle, but not a pullback candle, then there is the pullback candle, and then the market breaks the low, but at the same time breaks the high. Okay, so this is actually a structure break here, but you just have to wait a little bit to see if there is actually going to be a new valid range formed. And then you simply apply the rules. Okay, so here is that high of that shit wick. The market makes both an opposite candle and a pullback candle. So right now this turns into a valid range high that when it's broken, we're going to find the valid range low. And right now we have our structure. Okay, so hopefully that makes sense. You probably have to rewatch this again and again. Right now, I'm going to go on the charts and give you a lot of examples so that you can actually start training your eyes. And then, of course, you are going to start practicing on your own. So let's go on the charts. All right, here we are on the charts. And right now it's time for some chart works. Two things you have to do. The first thing is to go right here on that little button and find the highlighter tool and make it to favorite, so that you can actually have a very easy access to it. Okay, and then of course you can just pick your colors from here, right? I just picked this blue with low opacity, but again, just feel free to play with this one. I'm not gonna give a tutorial on TradingView. I have a tutorial on that. And then of course you're gonna need the arrows that I have also made a tutorial on. So depending on the time frames that you're using, I have like hourly up and down, daily up and down, 50-minute up and down, 30 minutes, 5 minutes, 1 minute, and 1 minute TC. If you want a full tutorial on all of this, link down in the description for my free Trading Fanatics community, where I give you a full tutorial on how to do all of this because it looks pretty good, and it also links to all the time frames. Now, we open this chart and we want to start marking up our valid ranges. So the keys for valid ranges is to not be so zoomed in, but also not be so zoomed out. Like, you don't need your charts to look like that, but you also don't want your charts to look like this, because oftentimes you can also miss some valid ranges. Now in that case, I usually start from a little bit to the left, just to once again ensure that I'm not trading in some sort of internal structure. Okay, the latest valid range I see is exactly, so if I take the right two, is exactly right here. Okay, so why is that a valid range, you might ask? Well, we had the market pushing. We have that high, and then the market makes, what is this? An opposite candle, which is also a pullback candle. All right, so this right here is a valid range already, and it makes a valid range high. Then the market proceeds to break it. Okay, and then immediately upon the break, I ask the very important question. What is the valid range that caused the break? And a valid range is simply, again, looking at the rules. There is the valid range. We wouldn't have had a valid range high, and if we didn't have right now a valid range low. So then what I do is I mark this as my higher low, and then what I simply have to do is wait for a new valid range high to form. In this case, you can see the market pushes up, it prints an opposite candle, but is this opposite candle a pullback candle? No. Why? Because you can see the market actually crosses that previous candle's high. So this is not a pullback candle, but it's an opposite candle. So also how I actually teach this in the school community is if you just mark, right? So this is an OC, okay? But if you want to practice, but not a PVC, okay? So then what you take is you take that highest candle and you refer it to the next one. So what is this candle? That is not an opposite candle because we're still bullish, but it's a pullback candle. Okay, so guess what? Right now you have your valid range high. And why is this a valid range high? Because it's an opposite candle, and then next to it we have a pullback candle. And again, right now we're using the rule of one pullback candle and one opposite candle. So we have a valid range high right now, and we have a valid range low. There we go, your first valid range. Then what the market does, it actually breaks this valid range low. And what does that give us? That gives us the trend change. Because we were bullish and right now we're bearish. Right now, what are we waiting for? We're waiting for a valid range low to form. What do we need? One opposite candle and one pullback candle. Bearish, bearish, bullish. All right, beautiful. Bullish candle. So there is our OC. So opposite candle. Is this opposite candle also a pullback candle? Not really. Why? Because it broke the previous candle's low. So candle anatomy says that this is not a pullback candle. Then what the next candle does, it continues on actually and keeps breaking further. So right now we have a brand new low and the market has printed one more bearish candle. So in this case, we have to reset the sequence because we have again a new low here. The market still pushed bearish. That's the new low. And then what do we have? We're having a pullback candle, which is also an opposite candle. So here in this case, we have OC plus PBC, and guess what? In this case, if we're using one pullback candle rule in this case, this defines this as our valid range low, and we mark it like that with this dash tool, okay, with this highlighter tool, sorry, you mark it like that. And right now, what is the valid range high? You already have it right here, right? You already have it right here. This is what caused the market to break lower. Right now, you have a valid low from a valid high. And if you want to draw your PD range, there it is. Market pulls back to the 50% and then goes on to break this structure low. What do we need right now? Bearish, bearish, bearish. All right, so firstly, after this break, we ask the question, what is the valid high that caused the break of the valid low? Or in this case, it's quite easy. It's this one. Is this pullback a valid range? Oh, yes, it is. Right, so from this low, we have a pullback candle and an opposite, pullback candle, pullback candle. This is also a pullback candle based on that. And then we break. And usually it's going to be pretty much the highest point in that case. Okay, so right now this is live conditions. What are we going to need? We're going to need an opposite candle and a pullback candle. But we're going to get that in 11 hours. What are we currently getting so far is both things. The market hasn't broken this low. So that is currently a pullback candle. Okay, and it's also bullish in a bearish market, so that is also an opposite candle. Okay, and if you then just go to the left, you just start doing this. There is another break of structure. Now, is this a valid range high? Well, yes, it is. Why? Because again, it made this high. This is the highest high, and then the next candle is both an opposite candle and a pullback candle that does not break this high. The market pulls back, makes this low, pushes up, then what is the low that caused the break of the high? There it is. Okay, same thing here. We're having that high that is broken. Okay, so why is this high a valid range? Because I probably should do it like that. Okay, so this is how you can also practice. So let's take a look at this price action here real quick. Now, the first thing you have to do is really get clear on where actually the real valid range is. Because what a lot of people do is they just jump on the chart like that and say, okay, we have a structure break here, and then we have a structure break here. But is that really valid? Let's zoom in a little bit. Is this here a valid range? No, it's not. Why? Because we're having this candle high. Okay, good. Then we're having a pullback candle. Good. But do we have an opposite candle? No. So this is not a valid range. We track it a little bit further. Okay, look at here. Is this a valid range? Well, yes, it is. We're having this high, then we're having an opposite candle, which is also a pullback candle, and then we also have another pullback candle, and then the market breaks. Okay, so then of course, okay, there is a break here. So what actually caused that break? In this case, we have to mark this low here, because that is actually, it's a little bit tricky here, but that is the low that caused the break of the high. Okay, and then you can see from this low all the way to this high, which is where we actually had a valid range high form. Now, why is this a valid range high? Because it has, again, bullish candle. Then on the next candle, we're having an opposite candle, which is also a pullback candle that does not break that previous candle's high. So what you can see in this case is that actually our range was this. It's not all the way down from here. Okay, although you can probably take it like this. It's this. That is very recent market structure. And then what you can see happening is this is exactly where we made the trend change. So up until this point, we were bullish, but we started seeing signs that the market doesn't really want to hold. This is where potentially order flow comes in. All right. And then the market makes a trend change. And then you simply ask the question, okay, what is the last valid range that caused this trend change? You track it back. Okay, is this a valid range? Yes, it is. Okay, and then simply then the valid range high that caused the break is this guy here. And then you can see here we form this low, and then what do we do here? We form a opposite candle, which is also a pullback candle. So guess what? Taking it into the one pullback candle rule, this is also a structure break, because this here was a valid lower low. Why? Well, because it has again next to it an opposite candle and a pullback candle. The next candle breaks it. So then as we break, you ask the question, okay, well, what is the high that caused the break of the low? It's this one. And then in that case, in the next candle, we're having immediately the next trend change. And you can see how nicely you're flowing right now. So right now we're having this very nice push. What are we waiting for? We're waiting for a pullback candle and an opposite candle. That's it. We keep pressing. Is that something? No, this one just keeps pushing. Okay, good. There we go. We had the high. And then right now on the next candle, we have both an opposite candle, which is also a pullback candle. So we mark this high right now. And anything inside between this low, which is the low that actually caused the trend change here, between this low and this high is internal. That is our premium in this candle range. And then what you simply wait is either for the market to break above that major high or to break below that major low for a trend change. Market dips below the 50% and expands, okay? And this is exactly where you once again mark up your structure break and you ask the very simple question. Okay, what is the valid range low that caused the break? Well, in that case, again, quite simple. It's that low, right? Pushes up. Right now, what are we looking for? Where we have a high, we need a pullback candle and an opposite candle. There we go. Both a pullback candle and an opposite candle. So in this case, this here is a valid high and this here is a valid range. The market pulls back, okay, breaks above. Okay, we have another structure break and then we're getting to where we were actually. Okay, this is a higher high right now, so we wait for it to actually make a valid range high. Keeps pushing, there it is. Push, 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 opposite candle, which is also a pullback candle as it does not break that previous candle's high. This is a valid range high. And also we forgot to mark the higher lows here that broke this. We drop our PD range, okay, and then potentially wait for the 50% pullback if it comes in. And then you just continue the process. But in this case, the market just continues to break and then we got the trend change. Okay, now this applies to every single time frame. Now the lower you go, the trickier it will potentially get. But for example, right now I can just quickly go to the 50-minute time frame and immediately start marking valid ranges. And this is where it could potentially get a little bit tricky because you really have to look at the details. Okay, so again, I'm just going to zoom out a little bit just to ensure that there is nothing internal. Okay, well, I see that there is nothing internal and I'm gonna potentially start from here. There is this structure break on the 50-minute. What caused that break? It is this high. Okay, this high to this low. Why is this a valid low? Because it had an opposite candle and then it had a pullback candle. So here we have a new structure break. Okay, what caused that structure break? It was that high. And then you can see on the next candles, the market actually makes a trend change. Okay, and then we have a new low. What are we looking for right now? We're looking for a new high. And if you zoom in here, what you can see is that if I actually just do it like that to make it easier, okay, we're having a new trend change. What do we need right now is we need a new valid range high. What is this? That's a pullback candle. Check. Do we have a, sorry, this is an opposite candle. Check. Do we have a pullback candle? Not yet. So we have to wait. So the next candle should not break above this candle's high. Does this break? Yes. Okay. So right now we have to wait once again for an opposite candle and a pullback candle. What is this? This is an opposite candle, but is it a pullback candle? Well, here we check the high stats. I just go on the candle itself and I look at here at the H. So the H here is 272 and I go to the next candle, 272. This is not a pullback candle. That is just an opposite candle. So right now I want to see the next candle to not break above this high. And it does not break above this high. So in that case, this here turns into a valid range that could potentially get broken. There is the break. And then you simply ask, okay, so what is then the low that caused the break? Well, it's usually gonna be the lowest point if there is not some sort of a valid range here, which we don't really get. All right, so that is the low. We break up. Right now we wait for a new high, which we immediately get. There is that high. Okay, that's that high. We're having immediately a pullback candle and an opposite candle. So right now our overall range is this. So now we wait again. Market pulls back. Okay, consolidate. So you can see here, you can start making the mistake, right? Remember, this is why you always mark. So I would even remove all of these and I want you to keep only the most recent ones. There it is. This is what we're having right now. From this low to this high. Anything inside is internal. Because right now you can start making, oh, break a structure lower. Oh, trend change higher. No, this is internal right now. The trend is still bullish. And there is exactly where we actually make the trend change. So then you ask the question, okay, what is the valid range that caused that trend change? You track it back. There it is, the last pullback. And is this pullback a valid range? Yes, it is. There is the market pushing lower, opposite candle and a pullback candle, and then continues to break. So then you mark this as your high. Okay, and then you pretty much, all you need right now is just this. You have the trend change from this high. And right now, what are we looking for? We're looking for a lower low to form. There is the lower low. We're having a low and we're having an opposite candle, which is also a pullback candle. Okay. We also have to mark it up. Don't forget. And here we're entering during Asia, which is when usually the market gets a little bit choppy. Here is another break of structure with a wick. What is the valid range that caused that break? We track it back. It is this guy. Right now, again, we're trading from this high to this low. And that low is already established because it has here in a bearish market, opposite candle. Good. And then the next candle is a pullback candle. So pretty much this low is valid. And then, yeah, we actually get the, okay, so this is some Asian news. We're having this. Okay, I was going to make a mistake. We're having this trend change because from this high to this low, this is what the range. We're having this trend change. And here is the detail, okay? In that case, what is the valid range that caused that break? Well, it's not this low. It's actually this low. And why is this low? Because here we're having, again, if you imagine that here we want to see a bearish range that pushes higher. We have that high, which is an opposite candle. And then we have this as a pullback candle. So this by itself here, if you just isolate this little thing, that is a valid range that causes the break. Okay? But this is the actual one that actually got broken. Okay, so here you can see we had a pullback candle, but it's not an opposite candle. So we still keep looking for the rules. There it is. This right now is established as a valid high. Why? Because it has a high. And then next to the next candle has an opposite candle and a pullback candle. The market pulls back. And then it breaks the major high once again. And then here is again that other detail is you have to ask, okay, what is the valid range that caused the break? In this case, you have two options. It's the lowest low or it's that low. Now, why is it this low? Is because this here by itself is also a valid range. This is where you have to learn how to isolate things. From this high, opposite candle and a pullback candle, this here is a valid range. So this is the last valid range that caused the break. So you take it from here, okay? And pretty much you keep repeating. If you do that enough times, you are gonna master it. So there is our new high. From this low to that high, you just wait. There is the market breaking the high. So what caused the break of the high? In this case, it's this low because there is nothing else. Okay, so then we have this higher high. And then the market looks like it's gonna make a trend change. There is the trend change here. Now, it looks like it's gonna get a little bit choppy, but you're still all systematic. There is the trend change. The market is right now pulling back. It formed a valid range low. Why is this a valid range low? Because we have bearish candles, opposite candle. It's not a pullback candle though. And then the next candle is a pullback candle that does not break below this candle's low. And then you just wait for something to break. So right now, the very recent range is this one. And you could potentially right now be looking for shorts. You see how it works? And this is so systematic that we actually built an indicator to do it exactly for you. But this is only offered inside my private program. But again, you can see those are exactly the same things that we did. It's just marked up. It probably had some that I missed here. Okay, I think I actually missed this guy here, all right? But it's actually gonna do it all for you. But this is my personal way to be systemizing market structure, and it pretty much works on every single time frame, okay? Again, like you can see here, makes the low, opposite candle, pullback candle, check. That's a valid range. Until it breaks, you ask the question, what is the valid range that broke the low? There it is, breaks up. In this case, it should be that one, but on the hourly time frame, we're actually using 2 pullback candles. So in that case here, we have an opposite candle, pullback candle, but we need one more for the 4H. But if I just very quickly go here and I go to inputs and I say hard time frame calculation, and if I do 1, all right, right now it should move to this low. There it is. So now this is the low that actually caused the break. Okay, so I am going to wrap it up here. It might seem a little bit confusing, but right now I invite you into our school community where we're going to learn a lot more about this, and I also invite you to start putting in some practice. Just learn about the opposite candles, just learn about the pullback candles, and you are actually going to find your own way around it. And if you have any questions, let me know in the comments. We can make an additional video. Hope it was insightful. Let me know, and I can't wait to see you improve your market structure and really trade without any doubts at all.